For that, shares of Intel actually tumbled in extended trading in the US after the chip maker's fourth quarter earnings missed street expectations because of a steeper than expected fall in PC chip sales. So the company has also actually refrained from providing a full year forecast, citing exactly this, that there's so much uncertainty going around. They said that they would continue to deal with persistent economic headwinds. So that is some more, important commentary to track that we're getting from a big US corporate. But that's everything that's going on globally that we're tracking for you this morning. Let's talk about what you should have on your radar as we get into a fresh trading session. Our research team is here with the trade setup as well as all of the individual stocks that you should have on your radar. Sonal, Mangalam, Vivek all join me now. Guys, a very good morning to all of you. And Sonal, let me come to you first as always. Take us through how all of the cues are looking. The handover, of course, has been positive.
Oh, yes, it has been very strong, especially from the US markets, right? You did point out about how the US markets panned out yesterday. The Nasdaq surge, we did see good, strong cues coming in from the global markets as well. And it was led by the US GDP number as well, which came in higher than what the street was working with at 2.9% versus an estimate of 2.8%. Well, there is a Fed meet which is going to be convened on Jan 31st and Feb 1st, and that is something that the markets are watching out for. In terms of stock-specific news, there was strong earnings coming in from Tesla, and that is something the stock surged, and earnings continue to remain the focus point going ahead as well. If we talk about the Asian markets, they are largely higher, and Hang Seng has slipped into the red, as you mentioned, but largely taking positive cues from the global markets. They are trading in the green. Japan's inflation number came in at 4.3%, which is higher than expected, and the yield there as well rose more than 3% to come in at 0.476%. SGX Nifty, as a result of all of this, is indicating that the start for our own markets could be well in the red, well in the green. If we adjust it with the Nifty futures, it's up around 40 odd points. So that is something that we'll be watching out for as well. As far as our own markets are concerned, Feb series starts from today. We have seen how the expiry was really on Wednesday. A sharp fall is what we saw on Wednesday. All sectoral indices closed in the red, and Nifty PSU banking index, that was the top loser as well. India Wix rose by 7.5% there. So that is also important to track. Immediate support now is at 17,761 to 17,774. Resistance on the upper side is where we are seeing it at 18,145. That continues to be the resistance point as well. Street, of course, is awaiting cues from the budget next week. Till then, it's expected to be a range-bound trading session for our own markets. Additionally, just a news, Indian market will shift to T+1 settlement from today. So that's the other big cue that we are watching out for. Back to you.
All right, Sonal, thanks a lot for taking us through all of those cues and prepping us for this trading session. But let's now talk about the individual names that are going to be in focus in today's trading session. Vivek has that entire list. Hi, Vivek.
Well, good morning. Whole host of stocks, that reported their results post-market hours. So first on our list, of course, is Bajaj Auto. Very strong beat to the consensus estimates. The earnings were much better than expected, and the company managed to report a record high EBITDA despite the weakness in exports. Net profit coming in over 1,490 crore rupees. Next on our list is Dr. Reddy. Again, a very good set of numbers from the company this time around. When you're talking about the profitability, coming in over 1,240 crore versus 707 crore last time around. The strong beat to the estimates was mainly led by the US business, where sales came in at close to $344 million for this particular quarter. Moving on to Tata Motors, very encouraging set of results here as well. The company managed to report a profit for the first time in 2 years. EBITDA, core EBITDA coming in over 10,820 crore, and JLR EBIT margin was up almost 230 basis points at 3.7%. DLF also reported its numbers. It's been a steady quarter from the company this time around. Margins coming in at 31.9% and profitability coming in at 519 crore this time around. Torrent Pharma, largely inline set of numbers, versus the consensus. Net profit coming in marginally low due to higher depreciation. But when you're talking about the core EBITDA, largely in line, 724 crore. Amara Raja also reported its numbers. Very strong set of numbers here as well. Profitability 222 crore versus 145 crore last time around. EBITDA margins coming in at 15% versus 12% last time around. CEAT is subdued in line with the seasonally weak quarter that it generally sees this time of the year. Tata Elxsi also reported its set of results, slightly muted results. LJV will be the stock in focus on the back of news flow, selling its entire stake in the Bhutanese JV for 355 crore. And of course, important thing to watch out for would be the movement to the T+1 settlement. This is the last tranche of stocks, both cash as well as F&O stocks, that will be moving to this settlement from this particular day onwards.
So clearly we have lots to track in terms of individual stock-specific action. Vivek, thanks a lot for that entire list. Finally, Mangalam is also here to run us through all of the cues from the futures and options space. Mangalam, we saw, an over 200-point downtick on Wednesday. Take us through how's it looking this morning.
Well, on Wednesday, it was also the Jan series expiry, so we say hello to the February series today as we kickstart that. And my, thought process is that whether it could be a big one for the bulls this time around. Why do I say that? Well, because February is known for big moves. Feb 2020 was down 400 points, Feb 21 was up 1300 points, and Feb 22 was down 900 points. Can bulls take, the charge in Feb 23? Why do I say that? Well, because in Jan itself, we've seen a cut of almost 299 points, and that follows a 290-point cut in December itself. So we're sitting on a 600-point cut in the last two series itself. The FIIs, while they've rolled over their positions in line with what we've seen in the last 3 months, 79% the overall open interest on the Nifty is sub 1 crore, and that's on a lighter footing. And apart from all of that, the FII long exposure has gone lower and lower in the last 3 series. So 77% at the start of December, 57% at the start of Jan, and 38% at the start of Feb series itself. So we don't have a lot of long positions. In fact, we have a lot of short positions. So if they don't get any follow through, we may perhaps see a lot of short covering. All of that depends on the triggers. Most of them are next week itself, which is the union budget on Feb 1st, and we have the US Fed meet on Jan 31st and Feb 1st itself. So we'll get the outcome on the same day itself. RBI monetary policies in the following week, and through that we will have the remainder of the third quarter results as well. The other couple of data points that I'm watching out for in the Feb series, the first one is global inflation and economic growth data that will come by, and secondly, are flows moving into China more versus India or not is another thing that can impact us. My sense is that if there is not enough downside, then there could be a case for a big up move in the Feb series.
All right, Mangalam, thanks a lot for taking us through all of those cues. Like you said, we normally see big moves in the Feb series. So let's see which way it moves, because we have so many cues that are lined up in the coming month. But for now, we have to get into a short break. When we return, a whole host of stocks are in focus. The likes of Tata Motors, Bajaj Auto and Dr. Reddys all posted their third quarter numbers post-market hours on Wednesday. So the fine print is lined up for you on the other side. Hey guys, welcome back. You're still tuned into Power Breakfast. Now we got some important earnings post-market close on Wednesday, like we've been telling you, and some of the big auto names posted their results. So Sonia is here to fill us in with how they fared. Sonia, Tata Motors, Bajaj Auto both posted earnings, and it's looking quite good for Tata Motors.
Oh, across the board actually, Tata Motors, Bajaj Auto and Amara Raja all posting good numbers. But let me start with Tata Motors because the numbers looked very good. This is the first time that Tata Motors has reported a profit in the last 2 years, so it is a milestone for them. The JLR, business, they achieved positive free cash flow of 490 million euros, and this was their target as well of being free cash flow positive, which they have now achieved. So that's something in the street would like. The consolidated revenues have gone up 22.5% at 88,488 crores, while the EBITDA is up about 52.9%. The net profits as well, there's a huge net profit of 2,950 crores versus a loss of 1,500 crores same time last year. The JLR business was a solid showing this time around. So you had the EBIT margins that went up 230 basis points year on year at 3.7%. And the company says that better supplies, a stronger model mix and pricing is what has aided earnings in the quarter gone by. However, they are cautiously optimistic about the way forward. They say that the demand situation depends on how global uncertainties pan out. But I expect the stock to open in the green today.
All right, good showing for Tata Motors. But Sonia, Bajaj Auto was the big one, like you pointed out, and that one looks quite good as well.
It does, and in fact, there are a lot of brokerages that have gone ahead and raised their earnings as well as price targets on the stock. So the earnings were much better than what the street was estimating. It was a record high EBITDA that Bajaj Auto delivered despite a weakness that we've seen in the export market. The revenue growth was in low single digits because of the steep fall that we've seen in exports. So it was just a 3.2% growth. But the big beat really came on the margin front. The margins went up almost 400 basis points year on year, coming in at 19.1%. And this is the second consecutive quarter of an improvement in margins for Bajaj Auto. Now, the company has said that judicious pricing, a better dollar realization and a richer product mix is what aided their margins this quarter around. Now, also, they're looking to expand their EV portfolio quite well. Remember, they have one product, the Chetak, which is the EV two-wheeler. They've sold about 10,500 units in this quarter. They have just about 4% market share, so they haven't
covered too much ground, but they're confident of expanding aggressively in the electric vehicle space. A lot of brokerages, JP Morgan has upgraded the stock, Jefferies has raised the target price to 4,300, well above the current market price, and raised the FY23 EPS by 2 to 6%. Back to you.
All right, Sonia, thanks a lot for that. So both Tata Motors and Bajaj Auto posting good earnings and expected to open in the green. But staying with earnings, the other big one came through from the pharma pack. I'm talking about Dr. Reddy's. And this one also did very well in this quarter. So Ekta is here to fill us in. Ekta, pretty much an all-round beat?
Yes, morning. Well, Dr. Reddy's was definitely a big surprise on the upside. Revenue was up around 27%. Street was anticipating 11% growth. Margins came in at 29%. Street was anticipating 23 to 24%. Profit also at over 1,200 odd crores. Street was anticipating over 800 odd crores. US sales came in at $370 million versus $344 million on a Q1Q basis. India was up 10% year on year, but it was aided by licensing income as well as acquisitions. Now, the key point with regards to these numbers is that the big beat came on account of Revlimid generic, which is a cancer drug. The cancer drug is expected to have contributed at least around $120 to $130 million. This is versus estimates of $30 to $40 million. Ex of Revlimid, the margins were down below 20%. So that also will possibly be a little bit of a concern that might weigh on the markets. Analysts are now worried that ex Revlimid, what exactly is going to be the growth driver and what will India growth look like going forward. Maybe the valuations could provide some upside, but as of now, yes, a beat for Dr. Reddy's going forward. What the earnings will look like will be something that the street will watch.
All right, Ekta, thanks a lot for getting us all of those details on Dr. Reddy's. Big positive surprise on the upside. But with that, let's move on and bring you the latest on the Adani Group Hindenburg tangle. The Adani Group has released a statement now saying that it is evaluating provisions under US and Indian law for punitive action against Hindenburg. Hindenburg, meanwhile, counters saying that Adani has not answered a single substantial issue it has raised, nor has it answered any of the 88 questions asked by the research firm. So that is the update that we have to bring you, but we are going to get into a short break now. On the other side, we're going to shift focus from equities and talk all about the commodity markets. Stay tuned. Hey guys, welcome back. You're still tuned into Power Breakfast, and as promised, let's talk about the commodity space now. Manisha joins us to tell us what's really been going on. Manisha, what are you tracking this morning?
Pavitra, morning. I'm looking at the gas prices, and what a sharp decline that we saw in the markets yesterday, so much so that we are down 30% now in this year, and we are 70% off from the kind of highs that we saw in 2022. We did see a warm start to 2023 winters, and the markets are looking at inventories which are much higher than last year in this season comparably, and that is what is weighing on to the markets. But the weather is now forecasting freezing conditions in the month of Feb, and some buying could start up again. Markets do believe that the gas prices may have bottomed at below $3 per MMBTU is where we are trading. Last 24 hours have been very volatile for the gold prices also. We saw a new 9-month highs at $1,950 per ounce, but we are trading at $1,930 right now. Prices have gained up by 6% in 2023, and from here on, it's only going to be one thing, the first Feb US Fed meeting. That is where all eyes are on.
All right, Manisha, thanks a lot for getting us all of those updates from the commodity markets. With that, a quick look at Asia, which is pretty much flat, barring just the Korean markets, which are trading with a 1.1% gain. But if you look at Japan, Hong Kong, they're all absolutely flat right now. There you have it, just around 16 points higher on the Hong Kong market. The SGX Nifty, adjusted for the Nifty futures close, is showing us around a 35-point uptick right now. So we will get a positive start, but this is also after a 200-point cut that we saw in Wednesday's trading session. With that, we're going to wind down on this edition of Power Breakfast. Thank you guys very much for tuning in. Bazaar Morning Call comes up in just a bit.